Hey, what's up? Welcome to DGen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts, and here we are looking at, pre-market prep for Monday, March 3rd, starting a little bit late here today. Was a little bit tired after ticker request live last night. But yeah, so let's get into the tickers. It's probably going to be a little bit of a shorter one. Since I did go over all those stocks last night. But anyways, here, starting off with UVIX, which is the 2X long VIX futures ETF, closed on Friday at a price of $31.50, being down about 4% on the day. And it looks like it's continuing down now, sub $31, down more than 2% in the pre-market. It's what we can see over here is just kind of like these, little green and red boxes that I like to follow that are approximately 2 weeks long. And so I just kind of notice that we have some big moves up in the green box, and then in the red box cools off over the next couple weeks, and then kind of starts up again with some more volatility. And so what we can see here is this green box that I've just kind of doodled out. And so this would be about, 2 weeks from the low over here. But since just like over here, we had a couple spikes up going to higher highs here. And also, breaking above that 50-day moving average, we kind of did the same thing over here. So I might actually adjust this green box with the expectation that the next 2 weeks, are going to be kind of a cool off period with this. And I'm actually just going to take a measurement of this box to see how many days it was. So that was over the course of 12 bars, so a little bit over 12 trading days, or so a little bit over 2 weeks. And so what I'm going to do now is just adjust this green box to correspond with the top of, this over here. And actually, maybe I want to take a measurement. So from the low up to the high from Friday, that was 6 bars, 6 trading days, a little bit over a week. But like this one over here, just taking all these measurements, this one was 6 bars again. So, I do think that we could be seeing a cool off coming down below 27, down to around 26, maybe 25, if not lower. And so, and then this did kind of follow the doodle that I had drawn here. Did go up a little bit higher here, but we did hit that peak right around the same time that I have doodled out there. And so, I'm just going to move this up to 3503. Hey, what's up, Sean? How's it going? Let's see. So I got that high there. I'm going to lock that into place. And then now I'm just going to draw this out. Let's see. And maybe the way that I want to do this is just draw data and price range box and have this go out. So I want 10 days. That's 10 trading days. And then I'll make it come down to 25 for the shaded rectangle. So let's see, 3503 coming down here. So I'm just going to adjust this to 3503, $25 over there. Lock that into place, make that less thick. And then, so now from that, I can delete that. And so that's kind of, what I think we could be looking at over the course of the next couple weeks. So for me personally, I don't have a buy order or anything like that, but I do have this alert set here at 26. And so I will look for this to be pulling back, as I do think that we potentially seen a bottom in the market. Things are going to start rallying, which will mean that the UVIX is going to pull back. If I do flip over to the 10-minute time frame, we can see over here, got lots of shading and stuff, but it does look like so. Let's see, Friday did hit that high of 3503, pulled back towards the end of the day, bouncing off of what looks like the 2,000-minute marker, and then consolidating into the after hours Friday, gapping down a little bit and consolidating over here, hitting a low of 35.50 in the pre-market. I think we're going to be heading below 30 today during market hours. Generally, bigger picture, downtrending, parallel channel there. So I think that this is going to be heading lower. Looking over at the VIX, Yeah, again, just like the UVIX, but do have this notable uptrending level that was support over here, kind of flipped to be approximate resistance, and we have been kind of battling with it. Got rejected from it on Friday, and I should note that the VIX is the market volatility index, which closed on Friday at a price of 1963, so being below that key level of 20 for the close over the weekend. And then we got some, kind of, tense stuff going on in the White House on Friday. And then it seems like that stuff might be getting worked out, and the crypto summit, I believe, the White House Crypto Summit is taking place on Friday this week. Got the announcement of the crypto reserve plans. And so, yeah, I think that a lot of stuff's just going to be cooling off. I think that maybe we got some tense moments last week, but I think that they will be resolved this week. So I think that's just good for the markets, and the volatility index will be coming down. And so to update my doodles, because it doesn't look like, I guess, it looks like that one happened just on a shorter time frame. But now what I could see is it coming down to, this white downtrend, which I might actually turn that one into green. Actually, no, that's a little too close to blue, so I'll make that yellow. So we got this downtrend here, and we do have all of these moving averages, the 50, 21, and 200-day moving averages in the range from around 17 down to around 1650. I think that we could be pulling back to those levels and bouncing from there. So maybe we do something like that. And that will be like over the course of the next couple weeks. So I'd look for some support between 17 and 16. And maybe I could do a Fibonacci retracement, but I'm not going to get into it because I do want to be getting onto the next ones. And so what we can see here, looking at the 10-minute time frame, does look like it did get kind of held up, caught by the 2,000-minute marker, the blue line there, because it's 200 moving average times 10 minutes, 2,000-minute marker. And then there's this doodle that I have drawn there, and so we kind of got caught by that. We'll see where it goes. No pre-market or after-hours trading with the VIX because it is, for options. That's why I like to trade the UVIX. But anyways, let's flip over to the SPY. This is the S&P 500, which closed on Friday at a price of $594.18. Being up about 1.5% on Friday. And it looks like it's bouncing a little bit, being up 0.3% in the pre-market around $596. And so this pulled back to multiple technical levels, one being this downtrending yellow line, and then also the 786 here got caught by that, hitting a low on Friday of $582.44, wicking to that 786 at 583.46, also piercing that downtrending yellow line there, and then bouncing up. So looking like we're seeing a reversal there. And so where could I see this going? The 50-day moving average looks like it's right around $598. I think that might be acting as resistance, as we did kind of consolidate below it over here. And I don't think ultimately that we will be heading down to this 100% Fibonacci extension, which would be around $575. So I'm actually just going to delete that. And I think that whether we get to 598, that 50-day moving average, I think that this orange downtrend that was resistance over here with the gap down Mondays that we saw, followed by reclaiming of those losses over those weeks, getting up to that orange downtrend, finding resistance there before gapping down again, did break above it, then broke below it. And so I think that will be acting as some resistance. So we'll see how high. Actually, I'm just going to redraw that because I'm going back a little bit. Let's see how high we go. Maybe we do something like this, form a bull flag, and then maybe do something like that. So that is, potentially what I'll be looking for with the SPY over the course of this week and into the following week. And this would correspond, of course, with the volatility index coming down as the markets go higher. And so we'll see. And, also this orange downtrend, that would be corresponding with approximately $600 a share which is right around where the cursor is. So maybe we get up to that, get rejected. But yeah, I mean, I think that this is just looking really good. 10-minute time frame. We do have the arrow that I just drew there, but we do have this orange downtrend right there. And so on Friday, we did wick down to 582.44 during market hours. Looks like we hung down there for around between 10, 20 minutes or so before starting to move higher, closing the week strong. Consolidating into after hours, and then the pre-market just floating a little bit higher. So looking good there. Then, following this bounce here, we do have the, I just want to look at this really quick, the S&P 500, ticker symbol SPX. So looking at the index here. And so I kind of had this circled here. I don't actually think we're going down to that level anymore because, we did pull back to the 786, wicked down through that level, tested this yellow downtrend just like the SPY. I am going to remove this 100% extension because I don't think we're going down to 5,700 or 800. I think that, we will be bouncing to test this orange downtrend. How did I have it drawn with the SPY? So yeah, that would be something like this over here, getting up to there, consolidating below that, and then I don't know how I drew that, something like that. A little bit approximate. There's a retest of that as support, and actually I should probably do that. I don't want to get too ahead of myself, being too bullish. And so yeah, consolidate below there, break above it, retest, and then go higher. And so I should probably extend this to be a little bit further into the future. And so yeah, that's kind of what I see there. And this, we do have the downtrending orange line there that was resistance over here, just like with the SPY. There is no pre-market trading with the SPX, but looking at the 10-minute time frame, I'm not sure if I already did that with this, but it does look like we are, bumping into that 2,000-minute moving average there. But anyways, I think the thing that's really exciting is looking over at Bitcoin here following the announcement of the crypto reserve that that's, I guess, proposed to be doing as announced via Truth Social, posted on X, and, everybody's talking about it right now. And so I have to say that I did talk about the possibility of coming down into the 70s, coming down into this shaded box here, but also thinking about a lot of people really expecting that to happen, people selling the downside moves here, thinking, oh, well, if we're breaking into the 80s, I'll just cash out here, I'll sell at a loss, whatever, I'll buy back into the 70s when we start to get back into this box, retesting the high over here around 74, I believe. Well, let's see, yeah, around 74. And that did not happen. We did not get to 72. I do have this alert here at 75 in case we nearly get to 74 or maybe get to it but don't get an order filled. 75 seems like a nice dip buying level if we were to have gone lower. Same with 72, and of course 69 just being a fun level to really kind of go crazy at. But yeah, all the people expecting to add to load down here in this box, who maybe sold here at a loss to buy back lower, they're getting left behind. They're getting screwed. I think it's a really bad idea to be selling on these downside moves to anticipate where it could be going, where one could be getting a better dip buying opportunity at. And so what we saw is actually a bounce from this 50% retracement at around $79,000. And so I have to say, I'm really proud for myself. I was buying up here in the range from, I think, 94 to 91,000. Then I took a break and I had my next buy at 86 and then at 80 and 79. And that $79,000 order was filled. And all of these buys, they're just $10. They're nothing too huge. And I do a daily $5 DCA. So nothing too, crazy with me. I'm not a big player. I'm a small fish, small time player. But yeah, I mean, it just bounced beautifully from that 50% retracement. And so this pink peach move down there, that is not happening. The moves that I have to the upside drawn here in green, we're, already kind of playing that out, in this phase. And so what I could see happening with this, I might just leave that. Actually, no, I am Yeah, I'll redraw the doodle. But what I see, what I think is really cool, is we moved up. I was expecting there to be a little bit more resistance around 86,000 because of this yellow downtrend that we saw over here. We consolidated below that, formed effectively a bull flag before breaking out higher. And yeah, so I just think that this looks really good. It's kind of surprising. We got this bounce here. And then consolidated here when we got the news of the crypto reserve, the plans for that, we broke out here. So yeah, I mean, I was expecting it to hang out around 86 a little bit longer, got that news, broke above it, and then now super cool. This level, this red line that was acting as higher lows, uptrending support, that we tested multiple times. Also 92,000, 93,000 that acted as a really good dip buy level when we were in this consolidation here, as well as the 786 from this low to the high. That's where we're at right now. So these levels that were acting as support before are now acting as resistance, and there's a confluence of those levels. Also, this white downtrend, I can extend that over if I'm careful and I don't fudge it at all. We can see that that is, approximately, actually maybe I don't want to, because I will end up fudging it. I'll just lock that into place. Or maybe I actually want to, redraw this. So maybe I want to fudge it so it's like, okay, there was more wicks up to this level, and so that was probably a more notable resistance before we got a fake out break above, get people to think we're going long, that they should be going long, and then they get swept, and then over here extending that out. That is where we're getting rejected from. So yeah, I mean, I think that looks super cool. And so what I could see happening with this is, just to doodle this out, maybe get some consolidation here over the course of the week. That crypto summit on Friday, maybe in the time leading up to it, we get something like this. And then we start to move higher, potentially getting to above 100,000. I feel like that's definitely likely or possible this week. But I do think that 100,000, that does correspond with the lows over here. So maybe there would be some resistance there, as this was support over here, flipped to resistance. And yeah, so I think Bitcoin's just looking really good, really excited about it. Currently trading above 93,000. But yeah, let's see where this takes us. And I might actually adjust this just so it stands out a little bit to make it, a green line there. Or actually, maybe I want to make it that green. It just kind of throws me off because it's between that light blue and the green over here. But anyways, yeah, that is what I could see happening over the course of the week. And then also have to take a look at uranium. So this is ticker symbol URA, the Global X Uranium ETF, which closed on Friday at a price of $24.80, being up 0.32% on the day. In the pre-market, looks like it's bouncing a little bit, going up about 1.69% in the pre-market, above $25 a share. And so what we see here is, effectively what I drew out going back to January 28th. So basically, from a month ago, I drew out this purple line that I expected it to consolidate like this and then break lower, coming down to around 25, if not 24.50. And we hit a low on Friday of 24.07. Just looks beautiful. Tested this uptrending level here. So I think that this looks, just spot on. I'm really proud of this analysis. I was a little, as we all are, impatient with this coming down, this move being played out, but it played out exactly. I was talking about this coming down to 24.50 a month ago, and that is based on this Fibonacci retracement here, the 786 24.50. I at least thought it would be coming down to the 618 here at around 26.35. Definitely broke below that and came down to, this uptrending level. Now, we also, part of the reason why I was a little bit skeptical or cautious of the being so convicted in this coming down to 24.50 is because of this yellow downtrend. That's the base of that parallel channel that I have drawn here based on the low here and these two highs. Did kind of get a near test of it up here. And it does look like we have this Fibonacci extension that I drew, which the 100% is 2503. So yeah, I mean, I was thinking 25 to 2450, and that's exactly what we got. But that 25, on that parallel channel, maybe we would not get all of that low, but we did. So I'm just thinking this looks really good. And so now, I mean, I think that we could be seeing, a move up towards, 30 to potentially fill this gap at 30.53, getting to the top of this channel. And so I'm just really excited about URA, but for me personally, I hold OKLO, OKLO, just have a couple shares, so nothing too crazy. But if I do flip over to the 1 minute time frame, 10 minute time frame for URA, we can see this low at the start of the day on Friday, 2407, bouncing from there, consolidating over here before starting to float higher towards the second half of the day, Friday into the after hours, and as well into the pre-market for today. So yeah, I think that this, just to doodle it out, is probably going to be doing something, like this over the course of, maybe that would be, over the course of March. So I think that March is going to be a good month for uranium as well as a lot of stocks. So I'm feeling pretty good about it. But sorry about not checking on the comments. I will follow up with that with Sean. What do I think about the tariffs tomorrow? Are they going to affect the market tomorrow? I feel like if everybody's concerned about tariffs now, I think it'll probably be a nothing burger. I think that all this stuff is just going to be going higher. Maybe there'll be a little bit of a blip, a little bit of volatility, but I think that everything's priced in. I think everything's priced in to be going higher, whether that's with the SPY, Bitcoin. So yeah, I think that stuff's going higher. And then hopefully ChargePoint has a nice bounce. It's from Anfodrew. I like the name. And so let's see. I'll just pull up ChargePoint here. And I will stream the earnings call tomorrow after market closes. And let's see. Yeah, I mean, but it is kind of just like, so for me, I kind of spent a lot of the cash that I had on the side last week. And so I'm just kind of sitting on the sidelines for a lot of my positions. Since ChargePoint is below $1, I can only buy in increments of 100 shares. And I just didn't want to be putting 60 or so more into this. But I did have a limit buy placed at 62. I think that got filled last week. And then I replaced it to buy more at 62. But I'm just going to kind of be sitting on the sidelines. We did form what looks like lower lows here in the stock price with higher lows in the RSI. That's bullish divergence. We did come down to the 1618 approximately from this retracement here. That 1618 is at 54 cents, 54.11. We hit a low on, it looks like the 25th, which would have been Tuesday from last week, I believe, and that was at 55.76. So nearly getting to that, retracement. And so for me, it's like, I really want to get, in all honesty, I really want to get my average down to around $1 a share or as close to $1 a share so I can trim my position very heavily. It's grown to be quite a large position, and I'm just a little bit skeptical of, more speculative plays, whether it's like ChargePoint, Plug Power, a lot of the ones that I've held, I feel like it's just, do I need to hold them? And, sure, I can hold a small position, but Plug, I have a small position in that now, so it doesn't really matter. I can hold that, I can sell it, I can trim it, whatever. ChargePoint is a large position, and I think it's just a little too speculative for me to be holding such a large position. So I want to get my average down so I can at least trim a lot of it at break even. My average, I think, is below $2 a share. I think it's probably around 180, but I will just pull it up. I'm just looking it up on my phone to see what my average is. My cost basis is $1.63. So that is, getting up to these levels up here. And so, I would want to trim very heavily my position. And so my position is, let's see, how many shares do I have of ChargePoint? Over 1,000, over 2,000. I have 2,300 shares. So yeah, I mean, while it's down here, really kind of want to aggressively getting my average down but not necessarily because I think it's going to be going up to these levels, because I just want to get my average down so I can take some risk off the table. But yeah, earnings coming up tomorrow after the close, at these lows. I mean, they did just get a non-compliance notice from the New York Stock Exchange where they're listed, that they may have to do a reverse split. They need to regain compliance. And so they need to get the share price to be above $1 a share, and to be holding above that, it needs to be closing months above $1 a share. And so what I view is that basically by June, I think that there will be an announcement. There will probably be a vote for shareholders on a reverse split. I think that they need to do a reverse split. They have not had one yet. And then by August, I think that they will conduct that reverse split. And so with that being said, I think that price is going to be going lower, but hopefully it can go higher and then fade lower. And yeah, and in this time, that's when I would want to trim. If there's a reverse split in the future, I, to be honest, don't really want to be involved, because I've seen what happens with reverse splits, and maybe there are squeezes after them, but I think that generally there are bleeds after them. So I'm just trying to be a little bit more cautious with this one. But yeah, I'm looking forward to the earnings call and to seeing what happens with them. But let's see. I'm just going to check my phone to see. I do my trades from my phone. So yeah, I don't have any alerts or anything being bought or sold in the pre-market. I guess some things that I could look at. Mara, I'm excited about. Mara is up about 12% in the pre-market. And so I don't have any shares of Mara, but I did buy a pretty expensive, I was during the highly regarded options theses, I had a contract, I think, hoping that it'd be bouncing from here. It didn't do that. Or maybe from the 200 moving. I don't really know. And we can see that it looks like, this is a Fibonacci extension. Where does that go down to? 750, 730. I don't think it's going down to there. And we've kind of come down to this double bottom, swept the lows over here. Earnings was last week, and I think that those turned out to be pretty good, as we saw like a bottom there. And now in the pre-market, looks like we're 1550 or so. That's going to be right around where the cursor is. But yeah, we swept the lows over here. We do see that there's no bullish divergence. We have lower low here, lower low in the RSI, so nothing to be going on about. But I think that this was potentially a fake out breakdown with the news about the crypto reserve. I think that Mara will be doing better. We just need to be reclaiming some of these uptrends that I've drawn here. Some of these levels, it does look like we are above the low from over here. If we look at the 10-minute time scale, we're above that 100% retracement at 1467, hitting a high of 1575 in the pre-market. And I got that alert there at 15, which I think is probably a below 15. And so, yeah, last week I am very proud. I got my average down on the call that I have, because I bought a call back here, recognize it's probably going to be going to zero, so I swapped it for a later dated one that expires in January. Last week I got a couple more of those contracts to get my average down, and we can look at that contract. And so let's see, the contract that I hold is a $50 strike call that expires in January, and so we can look over at the data in, let's see, unusual whales. So yeah, this is that call. This is the data from last Friday. And we can see that from, I'll just look at the premium data over here. This contract, maybe it's not that contract specifically that I want to look at. So let's look at this bigger picture, Mara premium here. So from Friday, we can see that the net call premium was gradually going up over the course of the day. Net call premium increased by $2.3 million. And we saw these nice little spikes. So from around 11:09 in the morning on Friday, we saw the net call premium at around 840,000, and then it spiked up to basically doubling to around $1.6 million, within the span of about 5 minutes there. So that's a pretty big buy. And we saw another bigger buy over here. We saw net put premium fading and then staying down over the course of the day. Net put premium came down by more than $1 million. And so that suggests, both of these suggest net put premium coming down. That is bullish. Net call premium coming down. That is bullish. If we look at the bear bull slider over here, that is, 50%, 51% in the favor of the bulls. So that's looking good. And if I go back to unusual whales, I can look at the flow data. And so let's look at it for, let's just clear all of this information. Look at this for, what is the ticker? I want to look at Mara and the time range. We can see, so this was, over here. This was a big spike. So let's look at a spike 100,000 for Mara. And I'm just going to limit this to what date? February 28th. So I'm going to limit it to that. And then I'm going to limit the premium over here to be a minimum of $100,000. So we got some contracts over here that spiked. And so if we look at the data here, we can see that this spike was around 11 in the morning. So let's just see here from these, big orders. This was around 10:30. We see, okay, hey, I'm getting excited about this. This was around 11:12 in the morning. This was on the ask side, so that's suggesting bullish. The strike is 1350 call. That actually expired, on Friday last week. So maybe that's not the best contract to be looking at. But let's, so that's not, giving us too much information because that's expired already. But we can look at that. I'm going to just get Ed out of the way so he's not blocking stuff. This was, looks like this person was GTFOing their position. That was a candle volume of about 18,000. And so on Friday, we had 36 volume. Of course, it's zero because it's expired. But we saw that open interest, people are exiting. So I imagine that was actually an exit. And so, this is not the best contract to look at because of that. So this was a spike. It looks like call premium going up. Let's see. So let's look at these other ones. This is 11:12 still. So this one has an expiration of this coming Friday. So maybe that's a little more useful. That was 11:12. And time in the morning on the bid side. So that does suggest a sell, but this was a $15.50 strike call that expires this coming Friday. And the premium on that was over $500,000. So let's look at that one. We do see another one here around the same time or a little bit later. That's an increase of, that's a different strike though. It's a different strike. But anyways, let's look at that contract. We can see this here. That was a spike in volume of 18,000, candle volume 18,000, candle premium 567,000. So that's what we're talking about. And so that's 18 contracts. What do we see? The volume on Friday was 15,000, almost, 15.7 thousand contracts. Open interest went from 2,000, increase 19, almost 20,000 to 22,000. So this looks like it was a buy. And you see this alert here. That means that volume has exceeded open interest. Open interest was 2,000. This volume for that candle was 18,000. Volume for the day, 25, almost 26,000. Open interest increased from 2,000 to 22,000. This is bullish. This is bullish for this week. And what we see in the pre-market is, this going up 12%. After Friday going up 6%. So this is looking really good. The strike that they have for that is 1550. We're trading right around that. So that was a good trade. And but we do have these levels to the upside that might be acting as resistance. So, I would maybe think that we would be doing something like this, just being gradual. And yeah, I think that March is going to be a bullish month. This here is the beginning of April where the cursor is. So yeah, I think that Bitcoin miners, I think that altcoins, I think are probably going to be doing good this month. And we do see, let's see, lower lows in the stock price, also lower lows in the RSI. This was pretty massively oversold. 2360, 2332. I think that this is going to be floating higher. So I'm pretty excited about that. And so, with that excitement, I'm actually going to close this down, bring Ed back, and throw this up here. As always, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and make sure you subscribe to the channel for more videos like this and pre-market preps, which I will try to do every day before the market opens. But yeah, with it being about 9 o'clock right now, I'm going to sign off so I can get ready for my day. You guys can get ready for yours. And I will probably be posting some videos later today and might be posting this clip of Marathon Digital because I think that data from Unusual Whales is probably pretty useful, pretty cool buy there. So yeah, have a wonderful day, and I'll see you, I guess, for pre-market tomorrow. We'll do a pre-market prep comboed with Plug Power earnings call, so that should be pretty fun.